Alibaba has been trading well off its high for the better part of 2 years, but is this a value or a value trap? Let's take a closer look at the technicals and fundamentals to get a better idea of where the stock can head from here. Baba IPO'd at $93 in September of 2014 and after a small pullback went on to rally, hitting a high of $320 in October of 2020. Since then, the stock has sold off about 80%, hitting a low of $58 over 2 years later. We have been trading a range between 75 and 120 since the start of 2022. Now we are trading below the 200-day moving average, which technically speaking means we are in a bear market and below the IPO price of 93. Now every time we attempt to get a rally going, the stock is immediately met with sellers and we go right back down. Baba has been basing out, and you can make a case for an inverted head and shoulders, which is a classic trend reversal pattern. If we contrast this with Baidu, Baidu also created an inverse head and shoulders, but it never played out, and the pattern was invalidated when we traded below the right shoulder. Even if we draw a trend line to the most recent part of the chart, it's still debatable whether or not we actually broke out of this downtrend. So some of the key levels to keep an eye on are the range that we've been trading in, which is between about 75 and 120. 100 has proven to be an important swing high and the all-time low of around $58. Baba is currently trading at a PE of about 11, and this is very cheap when compared to other mega-cap tech valuations and even when compared to itself. There is no doubt that based on PE, this stock appears to be a bargain. So Baba is slated to grow earnings by close to 40% and revenue by 30% by 2026. Now you can see we did take a small dip in EPS and revenue, which is certainly reflected in the stock, but if the forecast holds true, this is just a temporary setback. So what started this fall in Baba shares was when founder Jack Ma openly criticized the Chinese government, saying the need for reform of the country's financial system and adding Chinese regulators stifle innovation. Now, 2 days before the Ant Financial IPO, Chinese regulators pulled the plug, and that basically was the all-time high we saw in Baba shares. Now this further spiraled into delisting fears, which continued to plague the stock throughout 2021 and 2022. So digging into their latest earnings report, revenue and earnings were more or less in line with expectations, but the major headline was the decision to hold off on their cloud spinoff, citing they wouldn't proceed because U.S. chip export restrictions have made it too difficult to get critical chip supplies from U.S. companies. Markets generally prefer pure plays as it creates additional value, and then the shares sold off. Also noteworthy was the issuance of a $1 dividend per year, and they did end the quarter with $63 billion in cash. Between the constant threat of government regulation, as I just spoke about, the lack of stimulus and low economic growth, pulling back on foreign investment, and confrontations with the U.S., such as the chip ban, have been weighing on the Chinese stock market. Now couple this with US mega-cap stocks that have been performing very well and the dynamics of the money management business, I just don't see Baba shares gaining any traction at least until the start of 2024. Since we are at the lower end of this range, a long trade could be setting up, but until we break out of this range and get some closes above 100 and ideally 120, it's tough for me to get excited about the stock. Now there are just so many other places to put your money that are working, so why be a hero and buy Baba? Even if you bought Baba waiting for the turn and the shares didn't go any lower, there's still the opportunity cost of missing out on upside from investing elsewhere. Now Baba is a premier company, has always been on my watch list, and I will continue to keep an eye on it. So would you buy Baba, and what are your thoughts on the Chinese economy? Let me know in the comments.